Thanks, Christy. Good afternoon. So in order to secure equity and to support the expansion of Pt2, we propose a three-phase approach. The first phase starts immediately, and we recommend that you hire a marketing consulting firm, and their sole function will be to determine the value of the brand. Next, we recommend that you hire an investment firm, and we think that Pt2 should find targeted investors who also share the values of the company. This will ensure that there is no conflict between sustainability and profitability. The next phase looks at the development of flagship spas. We recommend that you develop spas in London, Dubai, and New York, and this will help to expand global brand recognition, and it will also assist in diversifying your geographical distribution. The funds that are secured from the investors that are found will then be used to start development on the hotel in Morocco. Moving on to the next phase, you'll start building your Moroccan hotel, and you'll evaluate the flagship spas to determine which market has potential for additional hotels. Following that, in the future, as the brand starts to mature, we recommend that you consider perhaps an IPO. This could be done on the London Stock Exchange. Now, to discuss the financial implications and considerations, I'd like to turn things over to Beverly.
Thank you, Renise, and good afternoon. This graph here shows the growth in projected CP over the next 6 years up until 2008. Now, your company, as you know, has been very profitable in the past and is expected to continue to do so into the future, and we commend you on that. In 2003 specifically, your GOP is expected to be $54 million, and this is enough to internally fund the spa division that Renise just described to you previously. Now, we would like to see your detailed financial statements before committing a set amount of funds, but we do expect that you will have more than enough. Let's take a look at the costs involved in your hotel expansion plan. Now, we do know that each new property that you add will cost $250 million US, and this is based on the cost of your Thai operations and is a worst case estimate. So in 2005, you will need $250 million to set up your Moroccan property. You'll need $750 million to set up your 3 new Asian properties, and you will need $250 million to set up your final Valley property. Now, this equates to external funds needed to be between $800 million and $1 billion US. Now, this does seem like a very high estimate. However, it doesn't assume that any of this financing is funded internally. And that's simply because we would want to take a look at your detailed financial statements. Let's take a look at the return that we can expect from your expansion plans and the investment. Now, the Morocco property, as shown by the red line in this graph, is expected to start generating profits in 2006. The 3 Asian properties are expected to start generating profits in 2007. And from these estimates, we can tell you that your investors will receive a return between 17 and 22% by 2008. Even if we conservatively scale back these numbers, you will still expect a positive return for your investors by 2008. I'll now like to pass it over to Luke, who will follow up with a summary to our presentation.
Thank you very much, Beverly. As Beverly indicated through the financials, what we can offer to investors is an investment that is both sound on a moral front, keeping all of those same environmental and social consideration factors and commitments in place, offering a handsome return. And we believe that the marriage of those 2 things should not make it too difficult to find good investors. So in summary, we believe that you should be soliciting private equity to fund expansion, and that will also allow you to retain control for the family. We will now take any questions that you might have about it.
From external financing, so you would want to make sure that it's in the range between 25 and 45%.
For under $1 billion.
Under $1 billion, yes.
There's just just if I might add, there are a number of evaluations that we've suggested as part of our recommendation, including the brand equity that would factor into the cost of what you would be offering. So, and also the cost for each individual resort. We used the Thai resort as our template, but other resorts may have a lower cost if they don't have the same kind of environmental needs that the Thai resort had. So once you've had those more firm numbers, we'd be able to identify the actual dollar figure that was needed and then apply that percentage that Beverly just mentioned.
So let's assume your $1 billion is correct. It seems reasonable. And you're talking about raising private equity. Are you talking about the entire building?
Well, we do expect that some of that money would be able to be funded internally. However, that's a worst case estimate. So if the growth projections are not accurate and you aren't able to realize retained earnings, then that would be the maximum amount that you would require to proceed with the growth plans to Morocco, the 3 new Asian properties, and to Bali.
Have you considered debt as part of your equation?
That could be a very feasible consideration. However, we would like to ask that we see your financial statements before making that assessment, make sure the ratios are in check and everything is in line to take on that additional debt.
You mentioned that you wanted to fund internally for the spa operations. I think that was 15 million. Is that what you guys had on there? Do you feel that 15 million you can take into your retained earnings and set your working capital and your ability to conduct business, in the everyday operations that are occurring at this point, or is this going to be something that can kind of slip in?
If I might, the Banyan Trees resorts actually operate at a higher gross operating profit margin than similar resorts, so we feel that there is some room in there to take those retained earnings and apply them to the spa division development. The spa division has also been recognized as one of their most profitable divisions, and it can be up and running in much faster time than the resort. Also, it will give us the global brand recognition that we're hoping to use as leverage for securing investors.
So it's great to say you want to raise private equity, and any ideas where you might find this private equity?
Yeah, we were going to partner with an investment firm, so we were going to target a green investment firm, since we know that we want investors that share the same values as Banyan Trees. And so we were going to target a green investment firm, and we thought Japan would be a good place to start, since they do have quite a large initiative for the green movement in Japan currently, and it is located in Asia, and so there is a direct link there. So that's where we would start with that.